Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, let's get to it. S&P up almost 14% for October. Could be the biggest monthly gain since 1974, but we are seeing the S&P down like 13 handles already this morning. Is this a healthy pullback, or are we just too overbought? We're going to go a lot lower.
At this point, we have to measure the same circumstances that we've measured the whole way. We'll use our retracement rules. For the past month, we've had a nice rally, a big rally, and every time that we paused, we held the top 25% of that recent zone. So I'm going to stay with the same type of method here to see if the commitment, the Monday commitment, is the same. So if you take a quick look at the chart of the S&P, you'll see this rally has been fast and furious. This was that Tuesday low. Here was your first pause. Didn't pull in more than 25% of this initial move. Then it continued to the upper end of the range. And if you look at this consolidation, never pulled in more than 25% of the move from the low to the high. So now we're all the way up here. So the question is, what type of retracement are we going to get, and is it buyable? So let's stay consistent here. Let's use the Fibonacci retracements. I'll go into my belt. If I was dressing up for Halloween, I could be James Bond and use the utility belt, but I'm not. So
Insert eye roll. Real quick, do you think we've seen the lows for the year then, as you're measuring these retracement?
Oh, we've I would be very, very surprised if at some point this year we even get back below 1,200. Okay, so at this point, what are we? It's October 31st. I would say levels to watch as far as people say, people are coming out making these big statements, I think the lows of the year are in now. Why didn't you say that on the first week when we were still around 11 and a quarter? But at this point, look back at this chart. These are the levels here. Your 25% retracement comes in about 1240. So it comes in right about here. And if you look, this is exactly where we broke out from the last time. So we're already below the 200-day, which I was talking about on Friday, that held Friday. And now I would say right around really first 1256 to 1250 and then that 1240. If we were to hold 1240 and we could buy that, that would be the exact same type of correction we've seen, and that would mean major commitment to this recent move.
And then if we break below that level, would you be then waiting to go long, or would you be initiating shorts, or do you have to see how violent that down move might be?
Exactly. You have to measure the action there. You have to see what's acting well. Are leaders still holding up? Do we pull back on light volume, or did volume pick up? And still, 25% retracement is the strongest you could be. You could still pull in a 38.2% retracement and still be in the top third of this entire move and still be considered very strong. But the rate or the speed will change. There won't be as many shorts trapped, and there won't be as many bulls saying, I have to pay up in order to get involved. So something could change, and that's what we have to see when we move forward, is what type of change happens so we could change alongside it.
And really interesting, before we go into certain sectors, I was reading a note from Deutsche Bank over the weekend saying that for the first time since December 2010, speculators have turned to net long from net short.
That's interesting.
Which is a pretty interesting statistic going forward. And in terms of sectors that we really wanted to look at, in particular, I want to go to the financials and the industrials, because they've been hammered the most and then rallied the most last week. Financials were up 7.2%. We had industrials up almost 5%. Is there more juice left here, or are we going to see a steeper pullback?
I think every sector is going to have a bit of a pullback, and what you do is you measure each one so you know which one to go to first. So the banks, we were all over after JP Morgan's report. Everyone's saying, oh, this bank move is over. We're like, no, it just has to absorb the recent move. We said 1250 on the XLF, hold that, hold above it, show commitment, it'll be great for the market. And it was. We had a big rally in the financials and the markets. Look at the XLF, you will see, this was the move. This was when we broke this little mini downtrend, right? Pushed ahead, held it, and now look. And we even used that gauge. We talked about Goldman Sachs so many times. Two different levels. 98.50 was like the line in the sand. That was the day they came out with earnings, and they weren't great, but it still rallied. That was buy number one, and then 104.75. So if you use the overall financials with Goldman, it was so easy to see, right? 98.50 broke this downtrend, went sideways, held it, and then this was your add-on buy. So imagine that in a banking stock, you can get an add-on buy. And now look at this move into resistance.
So where's that level you really need to watch then?
I think
Goldman as a proxy.
You know what? As a proxy, perfect. 110. 110, it could even pull down to maybe some portion of this gap. But if the banks are going to stay strong and you want to use Goldman, which is a good one to use, 107.50 to 110 should hold, and this should be a good spot to look at other banks to buy as well.
And we're also looking at some stocks that have made new 52-week highs or sort of trading around that: IBM, Visa, SanDisk, Chipotle, and also Cabot Oil and Gas. So what would you do with these kind of stocks here on some kind of pullback? Is it a good long value buy?
These are the stocks that we talked about that investors that want to actively manage their portfolios could have a tier one. And there have been times to be in tier 2 and tier 3 over the course of the last month, but I think now's the time to be back in tier 1 for a setup, because if you look like SanDisk,
Right.
SanDisk, we talked about investors could buy it, own it, be happy. You know, look at this move in SanDisk. Pow, new highs. If you were in tier 1 during the correction, this was your spot to add for cash flow as we broke the downtrend, not up here. Stay long, but don't be chasing the excitement. You still, in order to be in more than a tier 1 in any of these investment quality stocks, you have to align them up with chart patterns. So right now, they're a little extended, like IBM. You could have added back on that earnings shortfall. Stephanie was here saying how she loved it on the uptrend. This was your re-entry real quickly right here as it retested this uptrend, and now you had a nice bounce. So let IBM go sideways a bit, perhaps hold above 184, and then you could see new highs in the year.
So stay lightly invested in those stocks and look for better buying opportunities to add to that position. All right, if you want to know more about the stocks we're looking at today and how to trade this sell-off in the morning, join us for the entire morning call on the street.